Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, August 1st, 2025, we are dissecting the intricate movements of Tesla stock, ticker Tesla, integrating both recent news and critical chart data. When we look at the comprehensive one-day chart, spanning from March 2024 to the present, TSLA's journey has been nothing short of volatile and, more recently, concerning. After reaching impressive highs approaching $490 in December 2024, the stock has since entered a clear and sustained bearish trend, signaling a significant shift in long-term investor sentiment and market dynamics. This overarching downtrend is the crucial backdrop for understanding the current price action and recent catalysts. Let's zoom in on the daily chart, focusing specifically on the period from March 2025 through the end of July 2025. Here, we initially observed a robust rebound in April, with Tesla shares climbing from mid-$140s to over $280, demonstrating resilience and a strong buying interest at lower levels. However, the narrative drastically shifted in July. The pronounced declines seen throughout the month are unequivocally linked to a barrage of negative news. The TipRanks report, for instance, detailed a severe European sales slowdown for July, with sales plummeting 27% in France, 52% in Denmark, and a staggering 85.8% in Sweden, reflecting significant demand challenges. These figures, combined with the market's unfavorable reaction to Tesla's Q2 earnings reported around July 24th, which prompted the stock to slide, have fueled an aggressive bearish momentum. The current closing price of $308.27 on July 31st underscores the market's deep apprehension as it tests critical support zones previously established. Moving to the one-hour chart, it's important to note that our granular data set for this time frame extends up to July 18th, offering insight into the early July price action before the most recent earnings-related volatility. Even within this period, from July 11th to July 18th, we can discern clear patterns of consolidation followed by sharp bearish moves. Observe how the price struggled to maintain levels above $315 to $318, with significant volume indicating selling pressure emerging at these levels. This suggests that underlying weakness was already present in the market, laying the groundwork for the more pronounced declines we've witnessed since. The chart shows repeated attempts by buyers to push higher, only to be rejected, forming nascent resistance levels. For the most current and detailed picture of TSLA's immediate movements, including the critical post-earnings and latest sales data reactions, the 15-minute chart is indispensable. Focusing on the intense period from July 28th through July 31st, we can clearly see a rapid and decisive breakdown of key support levels. The stock conspicuously failed to sustain any momentum above the $325 and $320 zones, eventually plunging through the psychologically significant $310 threshold. Each fleeting intraday bounce was aggressively sold into, highlighting overwhelming bearish control and a stark absence of buying conviction. The corresponding surges in selling volume during these drops underscore the severity of the market's reaction, indicating that new negative information is being rapidly priced into the stock. Returning to the one-day chart for a strategic overview of price levels, TSLA's current close at $308.27 places it precariously near a critical short-term support zone around $305. This area holds significant psychological and historical value as a potential pivot point. A definitive break and sustained close below $305, particularly on increased selling volume, would likely expose the next substantial support level in the $290 to $295 range, potentially setting up a retest of the lower $280s seen earlier in March. On the resistance side, immediate overhead pressure exists around $310, previously acting as a daily closing hurdle. Should Tesla manage to reclaim some ground, the next significant barriers would be at $320 to $325, which served as strong resistance in late July, and then the crucial $340 to $350 level, a previous support turned formidable resistance. Overcoming these resistance levels would necessitate a fundamental shift in market sentiment and substantial buying pressure, signaling a potential bullish reversal. Now, let's weigh the arguments for TSLA's future trajectory. Short term, the dominant bearish sentiment is undeniable, driven by the alarming European sales figures and the market's largely negative interpretation of the Q2 earnings call, despite some promising quarter-over-quarter financial improvements. Furthermore, intensifying competition from global EV players like China's BYD and ongoing uncertainties surrounding U.S. EV subsidies continue to cast a shadow on investor confidence. For those with a bearish outlook, a confirmed and sustained breakdown below $305, coupled with robust selling volume, would strongly reinforce the downside potential. Setting sights on the $290 to $295 range, and potentially even lower to the $280 to $285 zone. The stock currently trades below its 200-day moving average, a classic bearish indicator. Conversely, the long-term bullish narrative for Tesla hinges significantly on its revolutionary ecosystem beyond just vehicle sales. This includes the ambitious strides in human-like robots, continuous advancements in self-driving technology, and the expanding energy generation and storage segments, which some analysts optimistically project could propel Tesla toward a staggering $10 trillion market value. While these ventures are inherently speculative and face their own challenges, they provide a compelling, albeit distant, upside potential for long-term, patient investors. The current TipRanks consensus rating of hold, with an average price target of $310.84, clearly indicates a cautious wait-and-see approach from many analysts, though the highest target of $500 showcases pockets of extreme long-term optimism. Recap of important price levels. For short-term trading, closely monitor the immediate support at $305. Key downside targets are $290 to $295, and a major long-term support stands at $220 to $230. On the upside, immediate resistance is at $310, followed by stronger hurdles at $320 to $325. And a significant long-term resistance at $340 to $350. Unbiased predictions. The likelihood of further short-term downside is moderate to high, estimated at 65 to 70%, especially if global economic indicators worsen or if Tesla fails to present a clear strategy for combating slowing EV sales and increasing competition. This bearish momentum would be strongly reinforced by a decisive and sustained break below the $305 support. However, a significant upside reversal, carrying a 30 to 35% probability in the short term, would necessitate a powerful and high-volume break above $325, triggered perhaps by unexpected positive news regarding a major regulatory shift, a breakthrough in autonomous driving deployment, or a massive new energy project. Things to look for. Moving forward, pay meticulous attention to Tesla's delivery numbers in upcoming quarters, global EV market trends, and any official announcements regarding new product timelines or pricing strategies. Elon Musk's public statements on social media or during company calls will also continue to be major market movers. We will continue to meticulously track these developments and provide unbiased analysis right here on Explain the Charts. Be sure to subscribe and hit the notification bell so you don't miss our next deep dive into the markets.